If you had one word to describe the US stock market this year, what would that one be?
You want to go first? Yes.
Casino. Hello, welcome to another episode of Bullish Banter. The football season is over. Rufas, how are you doing?
Well, football season is not over.
Yes.
There's still one more cup. You're just not in it.
Which cup is this?
Wait, you don't know?
No, you come me.
Club World Cup?
Yeah. But I think before we proceed, I needed to announce the winners of Bullish Banter Fantasy League, and then we can get into the discussion for the day. For those who participated, thank you very much. We hope you enjoyed the competition. The winner was Lad Zontore, Boni Rotich. So kindly, if you are listening to this episode, reach to any of our DMs so that we can appreciate you. And then number 2 was Stephen Okeo, El Patron FC. And the third one was Kelto Alfayo Onyango. Will put the table list out there. Do you participate in FPL?
Unfortunately, I don't.
No worries. Yes, we have a very special guest. I think I will let him introduce himself in a bit. Rufas, how are you doing?
I'm doing well.
Yeah, okay.
Yeah.
Excellent. Now, the guest for today, as we discuss a lot about long-term investing, or rather where to park your money after you are done with the markets, is Stomzy. Maybe you can introduce yourself a bit, your name, and of course, how are you doing?
Yeah, for sure. Thanks so much, Jesse. Man, it's so good to sit next to greatness, man. I've been listening to your podcast for a while now.
Big gardening.
I really appreciate it. I really appreciate just catching up with you all. But of course, as you've heard, my name is Stomzy. Long-term buy and hold investor from the school of Ben Graham, Charlie Munger, Buffett, those kind of guys. So it's good to, just exchange ideas, get to talk about, as you said, just being able to put your money somewhere where you don't have to actively manage. And you can manage your expenses and stuff like that. But I've been doing this for close to a decade now. It'll be a decade in August.
Okay.
Yeah, so fun times. Had my fair share of FX.
We will get there. Hold your horses.
My apologies. You're the whatever you say.
You have said something about Ben Graham, and there's this meme whereby, given the current market cycle in the stock world, you can decide to hold for long, but where Nvidia is right now.
Oh yeah.
Is the book still relevant, or the values and the concepts are relevant?
Those are timeless. Those ones, I don't think they'll precede any season or any century. But to your point, you do have a point. It's so choppy nowadays.
Yes.
Sometimes you can park up and get a bit of a hit.
Interesting that you mentioned that. Now, add into that sentiment trading and the increment of retail traders distorting, I would say, valuations of a company. I think that makes for a very interesting topic we'll cover later.
Sure.
Maybe we can begin from your origins. You run Basquiat Capital. You also have a YouTube channel, and you have been investing for a year. Maybe what is Basquiat Capital, and what made you go into, I would say, YouTube and content creation, basically?
Yeah, for sure. So Basquiat is, once again, like I said, I'm sitting next to greatness. So I copied a couple of things from you all, but basically Basquiat is...
We'll take it.
Yeah, it's really... So Basquiat is a investment club kind of arrangement. It's headquartered in Sheridan in Wyoming. So that's where we're registered. And basically our job is just to help people park up their money so that it can actually work for them. Okay. So whatever it is that you just said, if someone has an active role, whether it's 9 to 5 or it's business or trading, whatever it is, and you need somewhere where you don't need to actively, punch in kufinya computer.
Yes.
Dollars are printed type thing. This is kind of what we help do. So we help pick high quality companies for our customers based on their risk profiles. And then we just help them manage that portfolio over time.
Yeah. I think I mentioned this in a pod way back, whereby there was a Bloomberg commentary that in New York, people are starting funds or hedge funds for investing. almost every other day.
Yeah.
And the number of hedge funds in New York area
Yeah.
is almost equal to the number of Starbucks. You have heard that saying?
Yeah, it's true.
Right?
It's true.
Now, it means you have, of course, traveled there and you have seen the investment landscape there. People invest heavily. Is it for 1K? That is
Just
a
1K for
long-term retirement. And they do, I think Rufas is the one who says this, to them, stock market is like land in Kenya.
Yeah.
What have you seen for a young person who maybe went there and started investing, of course, in Kenya while in US, vis-a-vis what is happening in Kenya, and to be relevant with the FX market and opportunities? What has been the main difference and similarities between the two groups of young people who are trying to make wealth and also preserve wealth?
Yeah, for sure. I mean, that's such a very, very great point that you've brought up, because at the end of the day, when you look at it, the amount of education that is available right now is what is prompting, our young guys out here to, want to get into Forex and all kinds of manners of business to just try and
make money,
because that's literally the name of the game. So now in the US, it's totally different. For them, it's like, okay, cool, we'll make money, but we're doing this for retirement or for our children's college fund or for X. So there's a goal. So I think if we're able to now see the Kenyan youth and, people who are generally interested in trading and investing and stuff like that, move that mindset from, okay, fine, we're doing this to make money now, to looking at 10, 30, 40 years from now, being able to sit back like the way we're doing today. You can come and sit back and just chill, have a chat with your friends, drink coffee, all that stuff. Like coffee is paid for by something that you own.
Yes, the dividends you make or something like that.
Exactly.
So I think we just mentioned basket capital investing, but we haven't specified. So what markets are you like mainly focused on?
Yeah, so like 90%, 99% to be quite honest, is just US stocks. Yeah. But now we just started looking into diversifying, divesting into Europe and China. We talked about this by the in the other room. And we had some excitement.
Are you not focusing on Kakozi?
Yeah, why not locals?
Man, I don't know. Like liquidity for sure, that's one thing. But of course, like if you compare, and you guys can back me up on this one, and you can even correct me if I'm wrong. I feel like the way the whole system is set up here in Kenya, it's a bit difficult to navigate because number one, the tools for you to analyze a company, it's a bit difficult. You have to like rely on reading the financial reports
or buy the data
or stuff like that. Whereas you can get these things for free in the States. And you can have a myriad of options to choose from for you to be able to analyze a company. The news comes at you immediately. I'm not sure. I think most people maybe will read the paper, say, Kakuzi has done this. Maybe, with the advent of social media, maybe it's good. But personally, for me, it's just a decision that I made. I was like, okay, cool. I do own some Kenyan companies by the way. I own Bamburi, Safaricom. Don't laugh. Safaricom sent me a dividend of 400 bob the other day. I'm happy. That bought me coffee.
I understand where you're coming from.
I'm telling Jesse, if you have Twitter, you're gonna take the juices. And like comparing it to stocks, like if you really have to invest in a company, definitely I'm going for the best.
Yeah, for sure.
And I don't think
the list so far is not impressive. Why? For any person who has invested in NSE, at a time, Safaricom is always at the top of your mind. Every trader, I'm sure, I don't know if it's more or it's what, but if you look at top performing companies over the last 5 years, I know there are some NSE traders and investors who might correct this, but banking sector has never failed. Not once. They are annually producing good results. And every investor started with Safaricom, be it on their IPO. After that, they went to the next available company, Bamburi, for construction. You bought some cement, and therefore, so I can buy this. But Kakuzi, maybe few people understand the intricacies of agricultural companies. But banking sector, for some reason, very few people actually invest heavily on them. And they do offer, I would say, good dividends and stable capital gains. But that is not the first one everyone goes for. So interesting list so far. And then why it's funny is because at the time when you invested in it, I'm sure to date, it is on a negative, right?
Yeah, for sure. I don't even look at it. So I'm just like, you know what, let it just do whatever it is it's gonna do. But to your point, you know, I also have, I think I have KCB as well on my portfolio as well.
Good.
So yeah, I had some good dividends this past couple of months.
On the positive note, I know NSE has received some new CEO recently. Some changes have been made. We are seeing more data being released. Are you? Because personally, I'm looking to get back in. I know he has bullied me enough. We left and it was good. But right now, I would say it's becoming to some degree liquid. And I would say with the Kenya shilling stabilizing, has a positive outlook on NSE stocks, even if it's just mainly banking and a few telecoms. Are you looking to, given you are divesting from US, and we'll come to whatever is happening in the US shortly.
Oh, yeah.
Yeah. Given you're divesting, are you seeing a good premium in emerging markets like Kenya or other countries like maybe South Africa, something like that?
Yeah, okay. Actually, you have brought up a good point, because also there's some good South African companies, especially in the mining sector, that are really, really looking good right now. But, coming back to your point about Kenya and the huge improvements that, are being made, and we also talked about this earlier, the potential is there. Okay. It's just now the execution. Okay. If this is executed very well, there'll be a ton of interest, not only just from me, yourself, Rufas over here, maybe might even decide, let me buy a little bit of something.
Definitely.
Yeah.
Back to basket and, what you were saying when you're looking at stocks. There was a time ESG stocks were the thing, and ethical investing, activist in alternative energy, activist investing. What is the philosophy of your, I would say, I don't want to call it a fund, but your business? What is your philosophy behind this is the company I want to invest in for this particular reason? And how has it been to build that philosophy and stick with it?
Yeah, for sure. I mean, the investment philosophy has been really, really simple, and I'll just use one single word, and that's GARP, GARP, growth at reasonable price. So we're just chasing companies that are high quality, have good growth, and that are priced well. So that comes back to the value investing thing, but also looking at momentum, because if you look at what is this guy's name? This guy, State Street CEO, who was like even advising people not too long ago, beginners, if you want to start building a philosophy, look at momentum as one of the strategies that you can use to get into the market. But in a nutshell, that has been the whole philosophy for Basket ever since. I actually not even for Basket, even when I started investing for myself, and now bring it into Basket and helping our customers.
Yeah, okay. Yeah. I know investing requires you to check a lot of balance sheets and analyze maybe their quarterly, be it investor conferences, be it earnings report, chart, technical tools. How did you settle onto stocks, having been into FX market? You have seen the potential, of course, vis-a-vis this one, which is like planting a seed, and then the dividends will be later on. But in the early stages, a bit boring to say the least. What made you shift, and what skill sets did you acquire to now say at least investing is driving you well?
Yeah, for sure. And I'm looking back at it retrospectively. I'm like, I wish I met Rufas. I met you earlier.
First, I'm young.
Yeah, it's good to just have people who are like-minded, people who can help you understand something. Because back in the day, we were just like a small group, and we really did. Okay, personally, I didn't know what I was doing. Yeah, I lost a lot of money in FX. So that was my wake-up call. I was like, okay, cool. This is not working for me. And, you know what they say about, madness,
Okay.
Yeah, if you do the same thing over and over again, same results. Yeah, basically that's insanity. But with that was now
your shift.
My shift now to long-term investing, buying and holding.
Okay.
And so far, it's been a good journey.
Okay.
Yeah.
Oh, you said you started around, let's say 2015 thereabout.
2015, yes.
I think NSC has been running this competition.
Yeah.
Because I know for you to go global, you have to start local, and then you look at the gains vis-a-vis the foreign gains. It is a no-brainer.
Yeah.
Did you participate in those college competition or something like that NSC runs?
I did once.
The virtual
Yeah,
competition.
the virtual competitions.
Did you find them valuable in how you analyze companies now, or you are just playing it like a demo FX account?
100% was a demo because I didn't know anything. I was just like, okay, let's see what I can do with stocks.
Okay.
And I can't even remember what. I think I bought and just,
Okay.
yeah.
Just to wrap up on your personal, I would say, journey so far, you and Rufas are very, I'd say, at the forefront of different aspects of, I would say, financial literacy. How has the journey been for you trying to speak to a mass audience? And given, I would say, the economic situation in Kenya, not everyone has the luxury of holding an investment for more than 2 years,
2 months.
Even 2 weeks.
Yeah, and with stocks is like a retirement or pension plan, whereby the dividends are paid on retirement, or gains cyclical 3.5, 5 years. That's when you say, okay, my $1,000 has gained $300. It isn't a lot of money in 3 years, but in compounding effect, it is a lot of money.
Yep.
How are you maybe changing these mindsets to some of the young people you are meeting who are trying to build wealth and even save something for their later days?
Yeah, for sure. I mean, that's such a great point that you brought up. And the good thing about it is that whatever it is you said is 100% true. It's not something that you buy today and then you have $300 in 2 hours and stuff like that.
Yeah.
So trying to change that mindset from, okay, cool, whatever it is you're buying right now, you're not buying to benefit now. You're just delaying your gratification for when you're a bit older.
Okay.
And you don't have the strength. But also another thing that we're trying to really talk to with young folks and people who are in the working scene, it's shifting that mindset from just being a consumer, because in the world today, man, consumerism is king. That's why these companies like LVMH, any alcoholic brand, they're making like really, really good money, until the point where you even have celebs owning liquor because people just want to consume. So not just slowly trying to teach folks like, hey, you know what, you can also become an owner. That company, if it's listed somewhere, you can enjoy some of those benefits from the sales, and you can get your money back in terms of, like as you said, capital appreciation, you have your dividends, and you can enjoy those maybe 2-3 years from now.
You can be drinking your penny while getting dividends from LVMH.
Exactly.
Right?
Exactly.
Yeah. Interesting. I normally, for me, if anyone asks me about investment, I normally tell them, start with something you're familiar with. Which phone do you use?
100%. Yeah.
And Android by Alphabet.
Yes.
Which computer do you use?
Mac.
Start with Mac. Apple, right? Or Microsoft, and then
It's not that simple, guys.
No, I'm saying when you're starting,
Would you buy Coca-Cola shares right now?
yes.
Or quit Coca-Cola?
No, but I'm talking about
Yeah.
you making the first step. Not, I would say, picking the best stocks, but making that first step.
Yeah.
Start with something you're familiar with, and then read about it.
Yeah.
Maybe something small about it. They have previous, maybe 2 or 3 year financial performance. Look at their technicals. Where has it been? But at the very basics of stocks. That's why you see, he started with Bamburi and Safaricom. They might not offer much in terms of, like Safaricom, much in terms of dividend, because it has always been a capital gains type of company.
Yeah.
But you are in the matrix already.
Tell you what, I don't think everyone has I won't use this word. Not everyone has the nerve to just get into an industry first. Let's say you buy a stock and then it drags for several months, years without moving, and still have the confidence to keep adding more or to keep investing in that industry. So some people may not have that beginner's luck where you enter into an industry and you start making money. So they get frustrated and then they leave. So my philosophy would be take some time and learn about what you're investing. Never invest in something that you don't understand.
Yes.
But then at the same time, look at the kings of the road. You won't miss by much if you just go for something that has been working for some good time. So right there, that he has mentioned something very important, whereby you start today and then you continue. Dollar cost averaging.
Oh yeah.
Do you apply that to build your holdings, portfolios, and just before you move away, you invest in individual stocks or the SPY and the NQ ETFs? How do you approach it?
Yeah, I'll answer the first one, dollar cost averaging, 1,000%. And that's what I preach also to the people that I work with. Today's price, you're basically you're getting a discount for the future prices in some instances. But at the end of the day, we're just chasing growth. We want our money to work hard for us. And that's to Rufus's point, you just really have to understand whatever it is that you're investing in.
When you are investing, do you have a rule like, I will go for individual stocks, but I can also hedge or balance it with the because I saw somewhere you talk about beating the markets.
Yeah, beating.
So do you also invest in the markets, so beat SPY ETF, NQ ETF, and things like that, or industry sector ETF?
Yeah, for sure. So I think I owned VOO and QQQ.
Okay.
I think that's from BlackRock. I forget.
Okay.
But yeah, also just having those ETFs there is not a bad way, especially that's in terms of exposure, initial exposure for beginners. ETFs are good. You just buy the entire basket. Yeah.
That makes a very nice segue. If you're using FX Pesa, all these ETFs you have mentioned are there.
Yep.
Yeah, so you can start your journey, even though they are derivatives. At least you get familiar with it. You can trade with your maybe $1,000 account so that you understand the margin and everything, or a demo account. And then if you're interested in it, I think you have somewhere to introduce you before you look for alternative that you have to pay the full cash price.
For sure.
Yeah. Now, we are in the reign of one of the greatest presidents of the United States.
That's true.
As a beautiful bill.
Yes. As an investor, I know from 6th of November, you are a very happy man. The dollar is up $110 index. Stock market basically jumped almost 10%. And then 20th of January 2025, over 100 executive orders and announced, with the February 1st being the first tariff date. The market goes down 20%, suspended for another month, implemented again on a day after April's Fool's Day, the Liberation Day. How are you holding up?
I'm actually quite happy. I'm not gonna lie. And I'm even happy to show you some of the securities that I bought before he announced those started signing those executive orders. So 8th of January, got into some positions. A couple of companies that were really good because I knew they were going to get discounted. And I was like, you know what, I want to get in.
If you don't mind, you can share the sectors.
Yeah, for sure. So I had financials, banking as well.
Yeah.
Telecoms. Yeah. What is it? T-Mobile.
Okay.
And I think there's one more with, I want to say agricultural, because this is a company that not even helps produce. They basically rear chicken for the American market.
Okay.
So those 4 positions I got into prior to the tariffs. And right now they're in the green. I'm really, really happy I made that decision.
Yeah. Quick one. Are you on Truth Social?
Not yet. I whatever it is that Trump posts on Truth Social, he'll post on it.
Yeah.
So just catch it from there.
You get your newsletter.
And
because I think he has been giving some good call signals, And,
for sure.
And the sector related, I would say, decisions or announcements. The tariffs have caused a lot of uncertainty. I think you fall into the category of, I would say family offices or individual retail investors, right? We have seen you and many of, all of us in the retail sector making, I would say, decisions actively, while the real money, the hedge funds, the sovereign funds, taking a bit of pause, not investing, not divesting, but reassessing their holding. Do you align yourself with what they are planning, or you are like, if I can get ahead of this early enough before things get bad, you are able to exit, or you are just like, this is a passing fad and I will not really be bothered about it, especially with I would say sanctions being on and off and either going up or staying there but not really going away. How are you approaching such policy uncertainties?
Yeah, I mean, first and foremost, basically I think in this room, we can just say, we're just individuals who have the ability to think for themselves.
Okay.
Yeah. But of course, we can't ignore what's happening.
Yes.
So, institutional investors, deep pockets, big money,
yes.
Have a way of approaching such things. And the market really doesn't love uncertainty. But for me, I just believe in Mr. Market. He will do whatever it is that he wants to do.
Okay.
So my best way to approach it is to approach any kind of investment as I would raising a child.
Okay.
He will put your effort and time to make sure your child is healthy and is set up for success.
Okay.
But at the end of the day, these news will always send jitters down your spine.
So you don't worry about Norwegian fund pulling out of NVIDIA and then you are like, I should follow them.
No. It's cool. But if fundamentally I've done my own analysis, I think I believe in my own ability to be able to make decisions for myself. If they're wrong, I will live with it.
Very nice.
Rufas. Either way, Trump always chickens out. The taco trade has been winning, like really good. Every time he causes a panic, be it tariffs or whatever executive order, a few days later, the market just comes back up. So the bulls are not getting tired.
Yeah. Very nice that you brought that up. And you mentioned something, the big, beautiful bill. Maybe you can explain to the audience a bit about it. I know personally I was expecting this. Not this big, but it's significantly huge. And last time we talked about the bonds market jittery and all this, the Fitch ratings and whatnot. For us as traders now, these investors are not really worried about the day-to-day volatility. And by the time this episode is out, NFT will already be out, and we have seen some numbers this week. Are you seeing the dollar gaining some strength, or we are staying below 100, the DXY, all the way?
Well, in the near term, and near time I mean like end of Q2, maybe first month of Q3, I see the dollar remaining suppressed.
Okay.
So part of the reason I'm looking at this is on one side, inflation has come really low in the US. It's almost getting to 2%, which is the Fed's target, which means that if inflation gets to 2%, the Fed literally has no reason to keep rates that high, about 4%. So today we just saw the ECB cutting rates to 2.15%, and that creates a huge difference or divergence between the Fed and ECB. And of course, if they maintain rates too high for too long, and these other central banks are cutting, then we start seeing this carry trade, right? So on this other side, if you look at the big beautiful bill, of course it's the finance bill US version, right? So they're looking to do a lot of investments, reestablish the construction of the UX Mexico. There's the what do we call these missile defense system?
Golden Dome.
Yes, the Golden Dome and everything. But then the budget is so huge, it's bound to increase US deficit by 2.5 trillion. So at the same time, because they are targeting to spend so much money within the next 1 year, the debt limit may eventually be suspended, which Trump is pushing for, which would basically raise the debt ceiling by about $4 trillion. So this is literally no different from what we experienced during COVID. So whenever we see like a lot of money coming in the form of government spending, we know where all this money ends up. So as long as the government is spending more, this money doesn't go directly to people. Like there will be no stimulus checks like they were doing during COVID. So this money is going through the banks, financial institutions, before it eventually gets to the people. And the overall result we are going to see is most likely we are going to have high inflation. But then when you follow the money itself, whenever there is excess money in the system, it ends up in the stock market.
For sure.
Like if you inject money into the Kenyan system, and let's say you put a few $1 billion into the Kenyan financial system, the overall result you're going to have is the one asset that people perceive as a good store of value. So you will find a lot of people buying land. So definitely the price of land will be going up. So for the US, it's a bit different. Housing is not like Kenya, where if you own housing in Kenya, you don't pay taxes, especially if you're not in the urban areas. So for US, they pay a lot of taxes. The more properties you have, the more taxes you pay. So the stock market is seen as a much better store of value, and a lot of people put their retirement funds there. So if we see a lot of money being, let's say, spent by the US government, a lot of it is going to end up in the stock market. And this takes us back to the milkshake theory, right?
Yeah.
If you add more liquid into a milkshake, the froth goes up. Or basically the price of assets goes up. So, I see that as an opportunity for traders. For instance, for NASDAQ, SP 500, Dow Jones traders, we will still have a bias. As long as that bill is passed, you'll have a bias. You'll know that the SP 500 is going up. You'll not be looking for short selling position.
Yep.
So that kind of simplifies trading. But for investors, I think it will be just number go up. It's more about looking for the one vehicle that moves faster than the other.
I was just checking on what is happening right now because gold has just hit again 3,400.
Yeah.
And then dropped because Trump and Xi Jinping have held phone call conversation.
They're supposed to meet, by the way.
Yeah. And that tangents very well to what you have been saying about capital injection. We have seen China do this a lot just to prop up the economy and prepare it to fight all these tariff talks. And you have talked about TACO.
Yeah.
Trump always chickens out the trade itself. Basically, the deficit means more printing of money, right?
Yes.
We have seen again Japan basically being on bad financial situations, and JPY really suffering from that for the better part of last year.
Yeah.
And the monetary divergence topic that you have mentioned.
Yeah.
As a trader right now, I mean, it is putting you always have to be on toes of almost everything.
Yeah, that's the job.
For sure.
There is a lot of that and revaluation.
Yeah.
Maybe is there one piece of fundamental data that you would say
Yeah.
gives you at least a long-term view of the general price? Because as you have just said, dollar will be suppressed for the better part of this year. But these phone calls, we have seen how many times? Like 10 times. Geneva talks. This is what Geneva talks is about. We have seen the Gulf. He came back with almost $1 trillion commitments.
Yeah.
But it didn't do much until such a time when they said they are reducing the tariffs to a certain country. I always like to ask, what indicator are you using to give yourself the long-term view, the one you use, let's say, for something like Bitcoin, because you know the philosophy and probably the potential of price to go up, and therefore you can make a strong case for yourself that I know I can be selling this or buying this, but this is the main indicator of where the prices will go.
Well, for currencies, it's simple. It's central banks.
Okay.
So if the central bank is saying they are cutting rates and this is the direction they are taking, you can't fight that central bank. Like it's long known along all states.
Yeah.
Don't fight the Fed. So if the Fed is cutting rates, that's the direction.
Okay.
So that means that the dollar might remain suppressed for some good time. So for other assets,
are you looking at them cutting rates in June?
Yes. Most likely, because of the most recent inflation report.
Okay.
It showed inflation is really getting close to 2%, which is a target. But of course, the job numbers missed. We saw the ADP missing. If this Friday we get a very weak non-farm payroll, then the Fed will be stretched across two mandates. On one side, they need to get inflation to 2%.
Yeah.
This other side, they need to prop up jobs.
Okay.
So at the same time, that would add more pressure. Of course, the president is pushing them to cut rates. So when the data is aligning, then we know that rates are going down. So that's one likely scenario. But of course, Jerome could always hold back a little bit because he doesn't know the full extent of the impact of tariffs on the US economy. So that's the one fear that he has currently. But eventually there will be rate cuts.
Okay.
So if you look at other markets, for instance, the OPEC Plus cartel has been raising oil production. They did it in June. They approved for June, approved a hike for July, and now they are considering another approval for another hike. Mm-hmm. So if the cartel that controls a majority of global oil is increasing output, then we have a long-term view of where oil prices are headed.
Yeah, okay.
Yeah.
Down, basically. Probably down.
For Bitcoin, we just follow the money. If all these banks are just buying Bitcoin, and since last year, I haven't seen a single bank selling Bitcoin. So it doesn't make sense to not follow the money.
Not an investment advice, by the way. Stomzy.
Yep.
I saw a report recently. Unfortunately, my sources are biased towards Bloomberg, but there are other sources. They were saying there's a shortage in wealth advisors. Yeah. And wealth planners, and AI is now the talk of the town.
For sure.
How invested are you in AI? Maybe formulating your investment model, doing your research, pricing, valuations, and maybe now you're able to project your revenue vis-a-vis, of course, that company stock. How significant is AI in your job and in your investment plan?
Yeah, I mean, you've asked a very fantastic question, and the truth is in the pudding. And now AI is inevitable, not even inevitable. It's already key in our lives, and I'd be an idiot if I do not use the tools that are available today.
Yes,
because they're gonna get smarter and smarter and smarter. Because what I do on a regular for my current job as a side, as opposed to now building Basquiat, we're actually building agentic tools.
Okay.
So I work in a company that is working at the forefront, competing with the likes of OpenAI and Microsoft and Casa, Windsurf. Those are our competition, and
wow,
it's oh my gosh, it's crazy. The way that trajectory where you can see now AI getting smarter and smarter, and it's just not incrementally, it's exponentially.
So, once in a while I've asked it, can you build me a portfolio of $1,000 and they give me each individual sector breakdown, earnings per share, projected price, revenue, and everything.
Yes.
And then allocation wise, it's quite good. You'll have to change a lot of stuff, but I think it's actually good. And I think some major industry players have said it is necessary, but not absolute.
Not yet.
I want to believe you don't want to fall into that bandwagon of in like 10 years, 20% of unemployment rate will be there due to AI doing all the investing thing. Do you believe AI can, even if it gets smarter, the emotional decision, can that be replicated on the AI ecosystem?
To be quite honest, I really don't want to give you a concrete answer. Just to be safe, because the possibilities.
The competition with OpenAI.
Yeah. Trust me, I'm not even going to lie here, Jesse. This one is something everyone should watch, even right now.
Okay.
Even trading currency pairs, commodities, any kind of activity right now can be done potentially to a good extent, as you mentioned, by an AI agent.
Okay.
And if you're not using that and being part of the movement, you'll get left behind, unfortunately.
I'm of the opinion, I don't know about you, Rufas, that it will be a great asset if you want to be productive. Personally, I use it almost every day, either for personal education or my setting up my tasks and everything. I believe as humans, technology is not a bad thing. It just maybe improves our efficiency and productivity, and then it eliminates maybe inefficiencies in what we do on a daily basis. So I think, the unemployment will be there, but I don't believe it will reach the levels which are being predicted.
Well, if you take us a step back, like 2 years ago, and somebody told you AI would be doing what it is doing today, including replacing the Google search engine, you would say bullshit, and no way this is happening. So if it's growing exponentially, imagine what we'll have in 20 years. We can't comprehend as of now.
I think there's an episode I think we talked about.
Another thing.
Sorry.
Okay. This being Men's Mental Health Month.
Yes.
Yeah. Well, I'm feeling much healthier. I don't have to argue with anyone. Just pull ChatGPT. Is this true?
For sure.
It's really helping. It's empowering. It's saving time. Let's say a research paper that I would do in 2-3 days. Now I'm doing it in 2-3 hours.
Okay.
So it's really saving time. It's making me more productive. I can't imagine what it will be in 20 years.
Definitely. You remember when we were talking about NVIDIA at the time, and everyone, all the earnings, this would be 2023.
Yeah.
When we were speaking about NVIDIA earnings doing the last year 100%, the next year around 200%. And every earnings call that year we are introducing and integrating AI. And even everyone in Wall Street was asking okay, AI. What is the commercial gain from it, right?
Yeah.
Right now, I would say if you are paying for X, that 1,000 shillings or whatever amount, you are getting plus growth.
Yeah.
And I'm not privy of the data, but I believe once X started integrating growth was free, and then introduced that premium tier, I believe the AI aspect creates more value than the X being the number one news source. You're able to, you see an information, you're able to expand, read more about it, and stuff like that. If you're using like in your case, it means you are paying for premium, maybe of ChatGPT, that $20 a month, or Perplexity, or Canva, or whichever. You don't see a problem paying for it now, given the efficiency and support it can give you at your work. So I think, given that right now it has become more, I would say, a good assistant to human beings, the value for money is no longer a problem. I think now it's the scalability. How can this reach maybe the smallest and the cheapest of devices, the weakest of chipsets for devices?
Yeah.
And I think if they're able to sort out maybe the limits on queries you can ask per day, I think Google are in big problem.
I don't think so, because Google, I don't know if you watched the Google I.O.
I watched I watched it.
Gemini release.
They did a ton of product releases 2 weeks ago.
Google is still the number one search engine despite AI. I agree with you. For example, I'll give you an example where I think OpenAI is not yet there. If I want to check NBA playoffs when they are playing, if I Google it, for those who are following NBA finals, if I Google it, I get the date, the time in East African time. But if I put on ChatGPT, it tells me a lot of nonsense which I don't know. And I've just Googled NBA playoffs. So I think that efficiency and retraining of it still work in progress. But for academic purposes, informational,
for sure,
still Google are in problem.
For sure. OpenAI is competing very well with them. And, I think Rufas also might chime in on this one as well.
Yeah.
The only thing that will kind of like put Google at risk is the tools. If you give OpenAI, Anthropic, these LLM providers access to tools, Google will have a run for its money, because now at the rate of which they're shipping and pushing out new product, basically the LLM will learn faster.
Okay.
And the only cost cap will be on token usage.
Okay.
And that will be something that we'll be paying.
Okay.
So we'll be just consuming these tokens, because we're using complex queries, larger queries with a bigger context window. We can put in as many characters as you want and be able to, the tool will be able to come up with something that is close to, you can one-shot a problem and give you an answer pretty fast. So I think that's when it'll be.
I think what I've seen as the biggest advantage with Google is in terms of video creation.
Yeah.
They have these huge, humongous database of YouTube videos.
Yeah.
So training their AI based on YouTube and all the collection, they built this VO3 AI
and slow.
And it's able to generate very hyper-realistic videos. It's also generating sound and matching sound and video. It's so good. You can't separate a real video from a VO video. So if they have made that advancement with that version of their AI, they also come with operating systems, which of course will be added to their devices. Then they are way ahead compared to other companies.
Okay.
Only that they have so much data which they can use to train AI where most other companies don't have. That's why you see Grok was able to match up so fast, because they had the Twitter database. Yeah. So OpenAI doesn't have all that.
Yep.
Yeah. So they still have a really good opportunity to take over the AI race. And given the investments in data infrastructure, data centers and everything, I think they're still way ahead.
Okay. That is Google, eh?
Yeah. That is Google.
If you put it like that, I can't really argue with it.
I think the biggest challenge is China. How America will pump millions of dollars in researching a drug.
Yes.
And once they have a drug and they start selling it, China just takes the drug and creates a generic.
Allegedly.
Yeah. So it's the same thing. OpenAI creates a very top ChatGPT, becomes very popular within a short period of time. So Chinese guy, instead of training their AI on raw data, they train their AI based on ChatGPT. It gains so much faster, and then they open source it.
I think that is just entrepreneurship, to say the least.
Well,
and open market operations.
Without IP, without IP and IP rights, I think China can almost flip an AI. They just learn from it, and then they bring the product to the market.
What is it they say about good copycat? And we can all get Mwakenya, but one will get an A, the other one will get an A for E. So if they, I think they are special. For IT, I consider them specialized in terms of, I would say, repetitive manufacturing or multiply manufacturing, however you want to call it, and they are so specialized that they can copy whatever sophistication you have to the T and give you variations of what quality do you want?
Yes.
A real one?
Yeah.
Or almost a real one?
Yes.
So I respect I respect them for that.
Yeah.
But just to wrap up on the bill, I think there is a big contention because, and also AI, that in the bill there is no provision for regulating AI and the LLM companies with unregulation. Do you think it's a risk? Because I have also seen bankers say they don't want to release their, I would say maybe trading proprietary data or their bots or algos and everything to AI, because if AI gets access to maybe JP Morgan and how they do their pricing models, oh my days, that one will be easily accessed by somebody else. And when they access it, they can be able to play the game against them. Do you think regulation is a good thing and be a welcome thing, or it is too early to talk about, curtailing an industry that is growing?
That's a fantastic question. So I'll just apply.
Given you are in the industry yourself.
Yeah, in my real industry, because the pace is just, it's crazy.
Okay.
It's shearing fast.
Okay.
So basically when you're looking at the way products are being shipped, the way now just the industry is just moving forward at such a crazy pace.
Yes.
Regulating it will slow it down for sure, because what are you regulating? Like, are you going to regulate access to tools? Are you going to regulate access to information and training the LLMs and stuff like that? If there's like something concrete that needs regulation, then for sure maybe we might see something. But for now, personally, I'm anti-regulation. Let it mature. Let's see what's capable of. What this industry is capable of. And then now, when we start seeing a bit of risks, that's when we can start talking. And to that point, the CEO of Anthropic, I forget his name, he had a presser and he said, in the next 3-4 years, the level of unemployment that will be there, and this is someone who's building he owns the company that's building the product. He's saying there will be a crazy level of unemployment because at the rate of learning LLMs and tools and basically just the capabilities that AI is bringing onto the market, there's that risk. Okay. So if we're able to sit down as a major economies and say, okay, fine, you know what, this is something that is now putting our population at risk because, AI is not going to pay taxes, then probably that's when we're going to start seeing some bit of regulation. But I don't know, maybe Rufus has some thoughts on this.
Well, I'm also pro no regulation, but there's one caveat. If you look at history and new innovations and how they have played out time and time again, whenever there is a new technology, first of all, it's taken advantage of by scammers. If you look at the history of France, and I think it was 2006, 2007 when they did their first carbon credits market. Scammers got into the market and they freezed the government over $4 billion. So by not regulating AI, if it falls into the wrong hands, which most likely it will, there's a good chance we could be seeing a lot of crime happening, especially financial crime. So on that front, I would be pro-regulation. If some guy who has a really good model, let's say in finance or in stocks or commodities, then they get a really advanced AI, they can literally exploit a market. Whether it be arbitrage trading, front-running trades, or whatever the AI will be using, by the time the regulators realize, we could be seeing someone taking in 500 million or even billions of dollars. So on that front, I'm pro fast regulation, in that investors are protected.
Yeah.
Very nice. As we come back home to investing, I have a few questions for you. Sure. In your experience, what are some of the most common misconceptions you have had from new investors, and how do you address them?
I think the first one is basically people thinking that they can be able to make money immediately. I mean, we talked about this as well. You can trade and make a few dollars, but a lot of people think that they can be able to get crazy returns really fast.
Okay.
So that one is just something that, just a bit of education.
Okay.
You can be able to change someone's mindset to look at it long term.
Okay.
Another thing is that, say, a couple of people have actually asked me like the risks that are associated with it. How risky is the stock market and stock market investing, of which it does carry a level of risk as well. So you need to really know what you're doing if you're going to do it alone. So most of the time, when people come and ask me, hey, can I be able to make $2,500 a month based on my investment? I'm like, yeah, you can. If you have, I don't know, $1 million that you're willing to just put in, for sure, you'll make $2,500. If you have 10 million, you can even
that's 2,500x the return you.
Yeah, so you've got that kind of money, no problem. Just make sure you have deep pockets.
Okay.
So I think that misconception has always been there because
Guaranteed returns,
yeah.
Okay.
Because of what is being peddled, and this is something that Rufus and yourself we talked about as well. There's a lot of glamorization of high finance by
no risk, no lamb.
Yeah. People like to glamorize that. They're like, okay, I think this morning I saw someone on Instagram, on a cart. He's holding his laptop. The guy is filming, and you can just see candlestick charts. And he's there. He's like, yeah, this XYZ, I made X amount today, yada yada, and it's a big house, big backdrop. So selling these individuals that you can sell a beginner and tell them, hey, you know what, you can make a lot of money with this, and for that, buy my course.
Okay.
Yeah. So that's, for me, I just come in and I'm like, hey, you know what? It's not a get rich quick scheme. You won't get immediately rich, but in the long term, you will get wealthy.
I think, is it Buffett who basically made a good portion of his $100 billion after he hit the age of 60?
For sure.
That's when
Yes.
Apple started, giving good returns.
Yes.
Yeah. And he was actually able to make a lot of money. Now, tariffs have made stocks do what? 20% down, 30% up, 40% down in some stock individual companies. If you were to give one aspiring investor, one advice in navigating today's markets and the environment surrounding it, what would it be? Just one.
Zoom out. Just zoom out.
All right. Rufus, maybe, I don't know if you have any questions for him or you are closing remarks.
No, I have questions for you both.
Oh, okay.
If you had one word to describe the US stock market this year, what would that one be?
You want to go first? Yes.
Casino.
Casino?
Damn, I hate to use this one, but it's just uncertain.
Uncertain.
Uncertain would be the
Okay. And to our audience, for the next question, this is not investment advice. So, what stock are you most enthusiastic about this year?
Me again going first.
Yeah.
JP Morgan.
Okay, that's actually a good buy.
Yeah. Not an investment.
Not in investment advice, that one.
Yeah.
For me, BYD.
BYD.
Yeah.
Interesting.
Yeah.
That's a good pick.
Looking at Palantir.
Okay.
There is a reason why. I knew.
You are withholding information.
No, I'm not withholding. I'm going for the one who will bankroll all that information acquisition protection.
Oh, yeah.
And you know why I'll be going.
Oh, for sure.
You mentioned momentum. So
Yeah.
we'll see. Guess we'll see by the end of the year.
We will. It's going to be fun.
You know what JP Morgan said? Gold is money, everything else is credit, right?
Yep.
100%.
Who owns the gold?
That was before Bitcoin.
Yeah, we still anyway. That's a good one. That's a good one. It will be. Let's catch up on this.
Yeah.
In a few months.
For sure.
Actually, now full year circle. I hope we'll have you again for another conversation regarding stocks and investing.
Yeah.
And maybe your closing remarks.
Yeah, for me, I think just closing remarks is, once again, thank you so much for having me here. It's been such a fun session, fun chat. Would love to do this again and again and again, because, like I said, it's very difficult nowadays to, have conversations with people who are like-minded and, being in a presence where you can also learn a lot. And I must say that I've learned so much just prior to the podcast and coming on. And thank you for opening your doors, for always making it easy for folks like me to just come in, pop in, say hi.
It's a traders podcast.
Yeah.
So we don't.
It's open.
Yeah.
It's open mics. Also, how can our listeners find or reach you?
Yeah, sure. So they can find me on TikTok, on Instagram. Instagram, it's The Life of Stomzy. So that's the life of Stomzy, Stomzy. TikTok, it's Life of Stomzy. And on YouTube, it's The Life of Stomzy Show. So you can find me there. On Twitter as well. Huge fan of Rufas over here. I just love to read whatever it is that he has to say and comment and engage. Yeah, and just being part of the FX Pesa family, being here, it's such an honor.
We are privileged by your presence. I think for those who have met the bag and you'd like to park somewhere, you have multiple choices right now and somewhere where to start from.
For sure.
Yeah.
Well, to our listeners, thank you for listening. If you have enjoyed the podcast so far, make sure to like, subscribe, and leave a comment. And at the same time, make sure to share some feedback on the podcast on Spotify, as well as all other podcast platforms, including Apple Podcasts. Thank you.
I've been your host, Jesse. Till next time, have a bullish day.
Adios.